Tonight, the financial world is being forced to pay attention to something many investors had already written off just weeks ago. Silver. Not cryptocurrencies. Not tech stocks. Not AI companies. Silver. A metal often dismissed as old-fashioned has suddenly erupted back into the center of the global economic conversation after one of the fastest price reversals seen this year. What looked like a collapsing market only days ago has transformed into a powerful rally that is now raising serious questions about inflation, global supply chains, institutional positioning, and the health of the world economy itself. And the most important part? This may not be just another short-term spike. Because underneath the headlines, several deeply connected developments are unfolding at the exact same time across international exchanges, banking institutions, and economic indicators. Taken individually, each story would already be significant. But together, they paint a much larger picture, one that could have implications far beyond the silver market alone. Tonight, we break down what is really happening. We examine why institutional money suddenly appears interested in physical metal again, why Asian pricing dynamics are attracting global attention, why economic warning indicators continue flashing red, and why some analysts believe the precious metals sector may be entering an entirely different phase of the cycle. This is not hype. This is not internet speculation. This is about understanding how multiple market signals are starting to align simultaneously. And for investors around the world, that matters. Welcome back. Let's begin with the move that caught everyone's attention. Segment 1, the sudden reversal nobody expected. Only a short time ago, silver looked weak. Prices had fallen sharply during a wave of market liquidation that hit commodities broadly. Traders were reducing risk exposure. Momentum had disappeared. Financial commentators across television and online media were increasingly describing precious metals as dead money. Then everything changed. In less than 2 trading sessions, silver staged an aggressive rebound that stunned even bullish traders. The speed of the move is what shocked the market most. Normally, metals rise gradually as investors reposition over weeks or months. But this rally behaved differently. Buying accelerated rapidly, volume expanded, and price levels that had acted as resistance suddenly gave way almost without hesitation. That type of movement immediately forces traders to ask a critical question. Was the previous decline actually a trap? Because in many historic commodity bull markets, the strongest advances often begin immediately after violent sell-offs that shake out weak hands. Markets frequently reverse direction at the exact moment public confidence disappears. And that is exactly why technical analysts are suddenly paying attention again. Several long-term chart structures that previously looked bearish now appear damaged or completely invalidated. Trend lines that had capped silver for months are being challenged. Momentum indicators that were falling have abruptly turned upward. But the technical side is only one part of the story. What truly changed the conversation was what happened behind the scenes in the physical market. Segment 2, why Asia is becoming the center of attention. One of the biggest developments unfolding right now is not happening in New York. It is happening in Asia. Over the last several years, China has steadily increased its influence across global commodity markets. Whether discussing oil, copper, gold, rare earth minerals, or industrial metals, Beijing's role has become impossible to ignore. Now silver is entering that conversation in a major way. Recent reports from Asian exchanges showed substantial increases in silver inventories and physical activity. At the same time, prices in Shanghai began trading significantly above prices seen in Western markets. That pricing gap matters enormously. In a globally balanced market, major exchanges usually remain relatively close in price because arbitrage traders quickly move supply between regions. When one market begins paying dramatically more for the same metal, it often signals tightening availability or stronger local demand. In simpler terms, buyers are willing to pay extra because they want immediate access to real metal. That creates an important question for the global supply chain. If Asian markets continue attracting physical silver through higher pricing, where does that silver come from? Because unlike fiat currencies, physical silver cannot simply be printed into existence. Mining production takes years to expand. Refining capacity is limited. Transportation logistics matter. industrial demand remains high, and silver occupies a unique position among commodities because it is both a precious metal and an industrial material simultaneously. That dual role becomes especially important during periods of economic uncertainty. Segment 3: The industrial side of the silver story. Many casual investors think of silver mainly as coins and bars, but modern industry depends heavily on silver. It is used in electronics, solar panels, medical technologies, electric vehicles, high-efficiency batteries, military applications, advanced communications systems. In fact, silver's conductivity properties make it extremely difficult to replace in many high-tech manufacturing processes. That means silver demand does not rely solely on investor psychology. Industrial consumption alone creates enormous baseline demand. Now combine that with rising geopolitical tensions, supply chain fragility, and the global push toward electrification and renewable energy infrastructure. Suddenly, silver's strategic importance increases significantly. And this is where the current situation becomes fascinating. Because while economic growth indicators are weakening in some regions, governments worldwide continue investing aggressively into energy transition projects and technology infrastructure, both of which require large quantities of silver. So the market is now facing competing forces at once. Economic slowdown fears on one side, industrial demand requirements on the other, and investment demand beginning to reawaken in the middle. That combination can create extremely volatile pricing conditions. But there is another layer developing underneath the surface: institutional behavior. And this may be the most important part of all. Segment 4: Why institutional activity is raising eyebrows. In commodity markets, large financial institutions often tell the real story before headlines catch up. Retail traders react emotionally. Institutions position strategically. That is why recent activity involving futures deliveries has attracted so much attention. Normally, many futures contracts are closed, rolled forward, or settled financially before physical delivery becomes necessary. But when large institutions actively take possession of physical metal instead of merely trading paper exposure, analysts begin asking why. Because banks do not move large amounts of capital without reason. If institutional players increasingly prefer physical ownership during a period of macroeconomic stress, it may indicate deeper concerns regarding currency stability, inflation persistence, or supply availability. This does not automatically mean a crisis is imminent, but it does suggest that some sophisticated market participants may be preparing for conditions different from the optimistic narrative still dominating portions of mainstream finance. Historically, precious metals tend to attract institutional attention during periods of uncertainty involving debt markets, monetary policy credibility, or geopolitical fragmentation. And right now, all three of those risks remain active globally. Segment 5: The economic warning signs are growing. Now let's zoom out from silver itself and examine the broader economic backdrop. Because this rally is not happening in isolation. Across the United States and other major economies, several forward-looking indicators continue pointing towards slowing momentum. Consumer debt levels remain elevated. Higher interest rates continue pressuring households. Commercial real estate concerns persist. Manufacturing surveys have weakened in multiple regions. Energy volatility remains a threat, and government debt burdens continue climbing. At the same time, inflation has proven far more stubborn than many central bankers originally expected. This creates a difficult policy dilemma. If central banks keep interest rates high for too long, economic activity may weaken further. But if rates are reduced too aggressively while inflation pressures remain alive, confidence in fiat currencies could deteriorate. That balancing act becomes especially dangerous during periods of slowing growth. Economists sometimes refer to this environment as stagflation risk, a situation where economic growth weakens while prices remain elevated. Historically, precious metals have often performed strongly during these types of periods because investors begin searching for assets perceived as stores of value outside traditional financial systems. That does not guarantee silver will continue rising, but it explains why macroeconomic deterioration can increase interest in hard assets. And now, several of these pressures are emerging simultaneously. Segment 6, the psychology shift. Markets are driven not only by numbers, but by perception. And perception can change very quickly. Just days ago, sentiment surrounding silver was overwhelmingly negative. Traders who bought near previous highs were frustrated. Momentum investors had moved elsewhere. Analysts were discussing downside targets instead of upside breakouts. Now the conversation is changing again. That shift in psychology matters because large market moves often accelerate when sentiment reverses violently. Short sellers begin covering positions. Momentum funds re-enter trades. Algorithms detect trend changes. Retail investors return. Financial media attention increases. All of these factors can feed into one another. And once momentum builds, price movement itself begins attracting additional participation. This is why some of the largest commodity rallies in history unfolded far faster than most investors expected. Not because fundamentals changed overnight, but because perception changed faster than positioning. And right now, silver may be entering precisely that kind of phase. Segment 7, what investors should watch next. So where does the market go from here? There are several critical indicators investors are monitoring closely. First, watch whether silver can maintain strength above major breakout levels over multiple trading sessions. Sustained momentum matters far more than temporary spikes. Second, monitor the price relationship between Asian and Western exchanges. If premiums remain elevated, it may continue signaling strong physical demand. Third, pay attention to inventory movements across major commodity exchanges. Declining available supply combined with rising demand can dramatically influence pricing psychology. Fourth, observe central bank policy messaging carefully. Any signs that policymakers are becoming trapped between inflation and recession fears could further strengthen interest in precious metals. And finally, watch mining equities. Historically, mining stocks often move before major changes in underlying metal prices become fully recognized by the broader market. Strong performance in that sector can sometimes indicate growing institutional confidence in the sustainability of a move. But investors should also remember something important. Silver remains one of the most volatile major commodities in the world. Sharp rallies can be followed by aggressive pullbacks. Momentum can reverse quickly, and emotional trading frequently leads to poor decisions. That is why disciplined risk management always matters. Segment 8, the bigger global picture. Perhaps the most important takeaway tonight is not simply that silver rallied. It is why the rally happened now. The world economy is entering a period of increasing fragmentation and uncertainty. Global trade patterns are changing. Debt burdens are expanding. Trust in institutions is weakening in many regions. Supply chains remain vulnerable. Geopolitical competition is intensifying. During periods like this, markets often begin reassessing what constitutes safety, value, and stability. That reassessment can affect currencies, commodities, bonds, and equities simultaneously. Silver sits directly at the intersection of many of these forces because it touches monetary psychology, industrial demand, energy infrastructure, and investment behavior all at once. And that is why this story extends far beyond one metal. It reflects deeper questions about where the global financial system may be heading next. Final conclusion: a market entering a new phase? So tonight, the real issue is not whether silver moved higher for a few days. The real issue is whether the market is beginning to recognize a much larger structural shift taking shape beneath the surface. A rapid technical reversal, growing institutional interest, strong Asian, physical demand, persistent economic deterioration, inflation uncertainty, supply chain pressure, and rising concerns surrounding long-term monetary stability. Individually, each trend matters. Together, they create a very different conversation than the one investors were having only a week ago. The coming weeks will reveal whether this becomes a temporary surge or the beginning of a broader repricing cycle across precious metals and commodities. But one thing is already clear: silver is no longer being ignored. And when a market suddenly moves from total pessimism to renewed global attention in just a matter of days, Experienced investors know that something important may be changing. The question now is not whether volatility is coming. The question is whether the financial world is prepared for what comes next. If you enjoyed this breakdown, subscribe for more in-depth global market analysis, macroeconomic reporting, and precious metals coverage. And let us know in the comments. Do you believe silver is entering a long-term breakout phase? Or is this simply another temporary rally before more turbulence ahead? Thanks for watching. We'll see you in the next report.